Guys, this is the lowest it's been in 4 months. Everything has changed. Forget everything you knew about the 4-year cycle. We're at a 4-month low on Bitcoin trading dominance. You excited yet? I am not. I'm talking about Jimmy Cramer. No recession, says Jim Cramer, as analysts point to a good sign of rebound in commodities. So Cramer's out there. He's saying no recession. What does that mean to you, chat? He commented on this yesterday on the economic growth and inflation's trajectory. So what happened? It looks like Schwab analysts shared a chart of commodity prices saying they're rebounding with nearly 75% having positive monthly returns and down from the previous month of 81%, elevated compared to last year. Given his take on the chart, Cramer said, no recession, good sign. Going by the future of China, as represented by Baltic Freight, Cramer said inflation is low too. So looks like some good Baltic freight happening at the time. The index has become an indicator of Chinese economy's strength over the years. Freight Waves report show the BDI is 40% weighted to spot rates of Cape sizes, bulkers with a capacity of 180,000 deadweight tons. And Cape sizes rates depend on largely on long-haul iron exports from Brazil to China. ARK investor Kathy Wood said in a podcast, China is now at the margin as is downshifted from 15 years of double-digit growth rate to high single-digit rate growth now. Slower growth in China will remove the pressure on consumption and bring down global inflation, JP Morgan analyst said, according to Wall Street Journal. So we have China still a robust economy, still a strong economy, just not as strong as it was 5 years ago. All right, big short investor Steve Eisman says the market will continue to melt up as long as there's no recession and there's still no sign of one. I like how they have, they don't actually show Steve Eisman. They're like, you know what? Let's get the guy from The Office. If you've seen the movie, he's the one. That was his character. There's no indication of a recession, he told CNBC. Due to that, many people are playing catch up, helping fuel further gains. As long as there's no evidence of one, I think the market will continue to melt up. People are chasing. Although he says the hiking cycle as a potential catalyst for a downturn, he told CNBC that nothing points to a recession yet. And that suggests the market will continue to rally. Best known for the housing crash prediction portrayed in The Big Short. He said that his firm continues to be fully invested with no plans to withdraw as long as the economy keeps chugging along. I don't know if this is true or not, but it's my understanding he really hasn't had a good call since then. I don't know if that's true. It's just what I heard a talking head say that once.
He definitely doesn't have a high percentage of good calls, that's for sure.
Yeah, I mean, he bet big back in the day, and it worked out well. So, you know, I mean, I think that movie, that the book popularized him, but then the book, you know, then turned to a movie. Then you get Steve Carell playing it. Then, you know, he's like, hey, it's like Kiyosaki. He had like a really popular book, and he's like still riding the coattails. I'm not saying he's riding coattails from 20 years ago prediction. I'm saying it's from a 15-year-old prediction here. The only caveat I would say is after the Fed raises rates, Powell will speak, and if history is any guide, he will be dovish even when he wants to be hawkish. That just tends to be his personality. Oh, now he's mind reading. Another reason the recession hasn't emerged yet is that corporate net interest payments have actually fallen amid the hawkishness. Strong economic performance has also been paired by equity market strength as investors shrug off the tightening cycle to rally around the big tech firms that benefit from new developments in AI. So it looks like AI, hey, oh, you can fire 70% of your workforce, and then AI is going to replace everybody. That's good for your bottom line. Let's pump that stock up.
Yep.
Is that good for the economy, though? I don't know. Let's see. National League won the All-Star game. Okay. I did not know that. Did not know that. Mark the Shark has some sort of thing that happened. So congrats to you. I don't know what it is. You're not. Okay. All right. All right. It's Steve. It's a Steve. Roll with it. That makes sense. I see no signs of recession on the horizon. Narrator, keep looking. Bankruptcy surge. U.S. business failures are piling up at the fastest pace since 2010 by this one measure. So 2010, we had the 08 crisis, the 09 crisis. I find it interesting that they don't have data from 08, 09, which makes me think it was lower. So meaning this could be a lagging indicator. That kind of makes sense. People, oh yeah, we have enough money in the bank for payroll for 6 months. And then during that 6 months, they get another 3 months worth. And then it's like they keep chugging along, and then they break down 9 months after the recession, so you will. So lagging indicator seems to trend. Okay. So 2 years after recession, it looked really bad. As of now, though, we're coming in 2 years after 2021. I mean, I don't know what to look at this. I think it's really, there's too many variables going on with U.S. business failures. I think you have AI is one variable. I think you have, the pandemic is another variable. I think you have the lessening of globalization kind of, so maybe your things cost a little bit more that you used to get from China 2 years ago. Maybe you got to pay 40% more. Maybe that hurts your bottom line. And you have a consolidation of power. So you have a lot of companies being bought. So I don't know if we can look too much into this. What are y'all's thoughts here?
Yeah, it's not something right off the bat. I mean,
correlation is low.
It's not as bad as, the blue is not as bad as back in 2010. It does look like it's the highest. Is it tied with 2020? But of course that would have been pandemic. Yeah, I don't think there's. So yeah, I think it's too little information to really make a lot out of that chart.
All right, U.S. economy is in for a roller coaster. Woo! And could be headed for an ultra rare full employment recession. So what is happening? Blackrock saying, hey, roller coaster, could be a ultra rare full employment recession. That just sounds like a Pokemon I want to catch here. Yeah. Though inflation has eased significantly from its 41-year high, there are conflicting pressures in the economy that could make prices volatile. Blackrock said that's because consumers are shifting their spending from goods to services, which is driving goods deflation. But at the same time, the labor market remains tight, which is driving wage inflation as workers push for higher pay. All right, you ready for another DZ and encapsulation here? That makes sense, and it's going to continue to trend this way as we consume more and more digital content, as we consume more and more stuff that isn't tangible, as we consume more and more ones and zeros. So I'm spending money on ones and zeros. This percentage. 10 years ago, it was this percentage. 10 years before that, it was nothing. And so with that, you're going to have less goods, right? Like you're going to have less items being produced as more and more people live their, what's the word I'm looking for there?
It's a digital economy.
It's a digital economy, and people are going to start, I don't want to say vacationing in the,
they're
vacationing
matrixing
on the internet, but in a weird way, more and more money is going to be spent on the internet, meaning less goods and more services.
When you think about what a vacation is, it's supposed to be your escape, your rest, relaxation. That is what people are doing. They are working as little as possible so they can go home and relax and rest in a completely different world.